Thematics have had a challenging couple of years due to several macro headwinds, but areas such as AI have flourished, however. To discuss the landscape, I'm delighted to be joined by Stephen Kemper, Chief Investment Strategist, Team Advisory Desk at BNP Periba Wealth Management. Stefan, thank you for joining us.
Hey Theo, glad to be with you.
Good stuff. So jumping in straight away, really, what's your current take on the markets at the moment?
Well, I think the last couple of days have been, well, quite brutal for investors, but still I don't think there's that much reason for becoming panic because corrections do happen, and this specific correction was quite technical. I think the details have been discussed in great length in other forms. And while we do see some signs of slowdown in the economy, we don't really expect a recession. And in fact, we don't see much evidence in the data for a recession to happen. So interestingly, also companies seem to be less concerned about a recession as the number of mentions of the term recession during the last conference calls fell by a considerable amount. And the same is also true for the term layoff. So this is giving us confidence that we are in a situation where we do see some sort of an economic slowdown in the US, but certainly not a recession, which is, I think, still an at least okayish backdrop for equities, net net.
Good stuff. Yeah, that sets the scene very nicely. So moving into kind of the thematic space, kind of what's your take on current thematic landscape and how it's been impacted by sort of markets over the past few years?
Yeah. So my feeling is that we see a bit of a shift in the focus within the realm of thematic investments because there are not that many really new investment themes this year so far. Very often, from my point of view, thematic investment is closely linked to, say, storytelling. But the market is still pretty much driven by the same stories that we talked about like 12 or 18 months ago, namely AI, as you mentioned before, the Magnificent Seven, so on and so forth, you name them. So there are not that many really new themes to promote, which my feeling is resulting in less new issuances, at least with new focuses. And we see a shift towards more, say, strategic pockets within the realm of thematic ETFs, which are more target outcome series or active ETFs.
Good stuff. So yeah, maybe diving into that a bit more, kind of which areas in particular are kind of interest to you at the moment?
Well, we're currently talking about target outcome ETFs. We start looking into them as they often include some sort of buffer, which may attract especially conservative investors. However, I think it's very important to note that the advertised target outcome is only reached for the product if they are held within a very specific time period. This comes due to the maturity structure of the embedded derivatives within the product. But they can still help reduce volatility and drawdowns. And this is exactly what we saw during the last couple of days, couple of weeks, actually. So that was a good example that they can mitigate downside risk to a certain extent. And this is great. However, it comes with a cost, and this is your forgiving upside. Looking at two of the most popular buffer ETFs on UH large caps, for instance, they traded the S&P by roughly 10 percentage points over the last year, and this is quite a substantial amount. And this is why I do think that those kind of ETFs may not be the greatest buy and hold investment, at least not if you're a long-term investment and you have like 10, 20 years of investment horizon, because the effect of missed upside and compounding of that upside may be too big. But what we are currently thinking about is if and how to implement those products in during time frames where we may be less certain about equity market upside, or in portfolios where the time frame is substantially shorter. So that is one thing. And the other one is certainly active ETFs. And this is a topic which is very heavily pushed by vendors. And well, you've reported a lot about the topic as well. But my feeling is that the buy side is at least to a certain extent, still trying to figure out how and when and where to use those products. Because an active ETF by definition is no longer a very simple Delta One product.
Mhm.
And thus it may not be suitable to gain exposure to a market very quickly. It requires more work to understand the impact of the active part, and it brings those ETFs closer to active funds in terms of required analysis, in terms of required monitoring for us as product users. So I think if we look at index plus or index enhanced strategies, they may have room to replace simple ETFs,
Mm.
assuming they are able to deliver constant alpha as much as possible. But those real active unconstrained ETFs, I think they are more positioning themselves as competitors to either thematic ETFs or even active managed funds,
Yeah.
mentioning that the biggest difference to active managed funds is probably the potential for an ETF to take bigger positions, so having higher weightings of a couple of stocks, whereas active managed funds needs to be a bit more diversified. Yeah, but here again, there's more. I think there's more work needs to be done on the product user side to really understand the benefits, so on and so forth.
Yeah, no, absolutely. And just sticking on the sort of active thematic ETF theme, obviously we've had ARK Invest Europe kind of enter the market. Do you think there's room for the more sort of concentrated sort of thematic active ETF strategy? Do you think that can kind of sort of transform sort of thematic landscape a bit with the ETF space?
Maybe so. Without commenting on the specific ETF you just mentioned, if we look at those kind of product, indeed, then we are talking in direct competition with active managed funds. Then you need to have a very high conviction into the portfolio management's capability to generate alpha, to identify interesting investment solutions, and to a certain extent, probably your degree of confidence needs to be even higher because the concentration in those ETFs would can be even higher as you don't have the same diversification rules than than active funds have. I mean, if you have that level of confidence, then it's probably a great thing to do, and it's a great thing to have in your portfolio, as you still have a bit of diversification, but you're still very, very focused. So I do think that there's a certain room for those products, especially as a replacement or competition to, say, very traditional passive thematic ETFs, because themes often are shifting and needs to be adjusted to certain market circumstances, and that's where probably those kind of products can deliver value.
Yeah, excellent stuff. So, like in your view, then, kind of, are there any areas within the kind of thematic ETF space that are kind of lagging at the moment or lacking essentially?
Um, I think there's not that much. As I've mentioned before, there are not that many new investment stories out there that needs to be, or that are worth to be told and worth to be invested in. There's probably two things that are coming to my mind where I see would be nice if you would see more or additional products. The first one is regarding the data center and AI power usage. I mean, there are a few ETFs, but they are often either focused on the data center REITs, or they are more on the power side and they are more utility heavy. I think having some products which are positioning themselves more across the entire value chain could be of interest, as I think this is a an interesting long-term investment opportunity. And the second is, and this is also rather a long-term trend, is something focusing at AI beneficiaries, ideally with some sort of reduced tracking error in terms of sector allocations. So I'm not talking about like an very focused tech product. I'm more looking about we're talking about a blend product, but where within the sectors you really look, okay, which companies and maybe you do shift the sector weight a bit, what are the companies that really benefit from the usage of artificial intelligence? Which companies are able to, to increase their margins, profitability, etc., by using and employing, actively embracing AI? I think this could be quite an interesting long-term trend as well.
Great stuff. Well, yeah, I think that's an excellent place to finish. Stephen, thank you very much for your time. That was very, very insightful.
My pleasure. Thank you so much for having me.